Hey, what up, everybody? Welcome back to another episode of Filling Your Cup. I'm your host, David.
I'm your other host, Calvin. What's up?
And today we're going to talk about inflation because what is one thing that we all care about? It's money. And what we hate the most is our money getting depreciated in value, which means it's worth less. So, without further ado, let's start this puppy off.
All right, so what is inflation? So inflation is basically a measure of costs, rising prices of goods and services in an economy. If inflation occurs, higher prices for the basic necessities such as food, etc., can have a negative impact on society for me and you. So the feds have a target inflation rate percentage of 2%. Just to kind of keep that in control, they target to 2%. However, the current year inflation rate is 5.4%. So we'll see what happens.
So what happens when there's inflation, I guess. So inflation just means that so for this example, your gains in the stock market, if you were to make 5% gain, your actual gain is only 3% because inflation already knocked off 2% of your gains. So inflation is basically a tax on your money, on your assets. Uh, and normally when people, when they when there's inflation, well, not just inflation, but investors, they are kind of scared of inflation and of what it may mean and what it can do. So they kind of trend away from like growth and cynical stocks because money today is worth more than tomorrow because inflation is a tax on your future money basically. So growth stocks to maybe like stay away from is kind of like Uber and Lyft. Like these companies, they're all about growth. They're not profitable now. They keep telling their investors that we're gonna be profitable in the future. But investors sees inflation coming, be like, no man, I want more. I want companies that actually are making money now because money now is worth more than tomorrow. So they probably tend to flock away from Uber and Lyft and invest in more traditional stocks like McDonald's or Costco because those two companies, they provide dividends and they're relatively they're stable. They're not super volatile because as you can see, like a couple months ago, a lot of the high tech stocks, they all just took a dip because the fear of inflation, basically.
Yeah. All right. So again, average inflation rate is 2%. 5.4% within this past 12 months. So what can the feds do to control the inflation rate? Well, if it's too high, feds easily just, raise rates, increase interest rates to try and slow down the economy and kind of keep that inflation rate in control. Simple.
Simple, huh? So what happens when the Feds raise interest rates? So one of the biggest thing is it becomes less attractive to borrow money, right? Because just say when interest rates at 0.25%, you're more likely to borrow $300,000 than if the interest rate is, just say, 3.4%, because now you're paying a lot more in interest. So one of the biggest thing is like, so one of the biggest things that comes with interest rate is the increase in interest rates. And usually when people buy big ticket items like a home or car, usually homes, they are more hesitant to buy the new home because they don't want to pay the higher interest. So right now is like the best time for you to buy a home, or if you're thinking about refinance a home, is like the best time to do it because interest rate will go up because of the current financial environment. The Feds have been printing a lot of money, and the U.S. is borrowing a lot of the money, which caused the printing, and inflation will come. And when inflation comes, interest rate is like the only way the Fed can kind of combat it because If they don't, then it can spiral out of control to hyperinflation, where a loaf of bread will cost $30 for a loaf of bread. So interest rate will be coming to trying to slow down the purchasing power of the people, which is us, and that's kind of like their way of that's only like that's like one of the method to control the increase the interest the inflation rate. So what do we get out of this, Calvin? So interest rate is gonna go up, right?
Yeah.
That's like a
Yes.
given, right?
Yeah. So personally, you know, or a lot of people who are looking for a home, now's a great time to buy a home before they go up because they will go up eventually because uh, due to the most recent like job outlook, uh, the unemployment rate is going down. So the economy is slowly coming back to pre-pandemic levels. So you could expect the rates to slowly creep back up eventually. So if you are in position to purchase a home, now may not be a bad idea to go for it. Yeah.
No better time than the present. That's
Yeah.
all. That's what my past self always says. No, I'm just kidding. Actually,
Yeah.
that would be the future self, because the future self tell your present self there's no better time than the present. Because don't wait for the future, because the future, I'm coming back to the present, bro. Because from the future, there's nothing else from the future, right? If you're from the future, that's it. But if you're in the present, you could delay it to the future, but then the grass might not be always greener on the other side. Oof.
Exactly. Woo. I mean,
Shots fired
I just
today, bro.
I need my future self to tell me those six magic numbers, and I'll be set for the future.
Yeah, we all wish we have a magic ball, right? So I mean, yeah, that's our little tip this weekend for you. Interest rate inflation is here. Interest rate will go up. So if you're thinking about buying a big ticket item such as a car or a house, right now is probably the best time to do it. So so like always, stay safe, stay informed. Please like, comment, and subscribe, and come holler at your boys later, bro.
Peace.
Peace.